Last year, I proclaimed something about my protein, but will overlooking a core brand positioning element end up making me look dumb? On September 15th, 2022, THG, which was formerly known as the Hut Group, updated the public markets by releasing its 2022 first half earnings report. So I'll be utilizing that financial information along with the earnings call commentary and kind of any relevant publicly disclosed information to obviously update you on the recent performance of THG and specifically the nutrition division that includes my protein, but also utilize kind of everything to provide insights about the global sports and active nutrition markets. Just some kind of quick financial kind of mumbo jumbo housekeeping for us Americans. These numbers you'll hear throughout the content will be for the first half, so 6 months, not 3 months, because THG is not an American corporation and has different reporting standards for its public markets. Additionally, I did the currency conversions on all of the numbers. So these numbers that you will be hearing throughout this piece of content will be in US dollars, not British pounds. And then finally, the comparative percentages will be on a constant currency basis, which just kind of basically means foreign currency fluctuations of this multinational company will be stripped out for ease of comparisons. For those that might not be too familiar with THG, the company is currently made up of several different divisions. There are two branded product divisions that focus on the beauty category and then the previously mentioned nutrition category. They also have a proprietary end to end direct to consumer e commerce SaaS solution that is used by THG Nutrition and THG Beauty, but also licensed to third party brands. This is called THG Ingenuity, and it's essentially the kind of master switch for the whole organization. THG On Demand is a personalization and customization retail offering used by THG Nutrition and THG Beauty, but also sold as a service to third party brands, usually those that use THG Ingenuity. Finally, there's a kind of catch all other division that houses some luxury kind of fashion brands that don't necessarily fit into THG Beauty or Nutrition. This is also where the revenue from the THG Experience, which is focused on experiential brand building events and influencer marketing subdivision called THG Society, is placed for financials. Since I'm primarily interested in updating you on the recent performance of THG Nutrition, I'll focus most of my information on that division. That being said, I will, though, cover each of the other business segments quickly so you can kind of understand the whole machine a bit better. Let's start at the top with a quick financial overview of the entire THG group. In the first half of 2022, THG had a total revenue of about $1.3 billion, which was up 11.9% year over year. 57% of THG's group revenue comes from outside of the UK home market. The second biggest market now is the United States, which has a year over year growth rate of almost 24%. Revenue by division shows that THG Beauty is its biggest contributing factor at over 51% of its total, outside of THG Nutrition, which I'll cover at length here in a second. The other divisions currently have less of an impact to THG's group revenue. That being said, THG Ingenuity has had outsized growth comparatively to the other divisions until this latest first half report. The gross margin for the entire THG group was down 440 basis points year over year to 42.1%. With most of that decline being attributed to THG Nutrition, I'll expand on the reasoning in that section. THG continues to have operating losses, but does have a robust cash position and credit line availability to overcome its kind of spending during this growth phase. The company has stress tested its liquidity model and would need to see a significant decline in revenue and margins to have any material business continuity risk. Before I switch over to that THG nutrition commentary, I wanted to quickly talk about something that is related to that profitability slash liquidity point I just made, and also provide an update to a piece of content that I created in May 2021 that surrounded the announcement of a multi billion dollar investment by Softbank. Well, just to kind of rip the band aid off quickly, there has been a change of plans. With the value of THG falling well below the option price, that SoftBank had to acquire 20% of THG Ingenuity, and the Japanese investment firm also having its own problems, the agreement has been terminated. Another element of that original investment plan was spinning off the THG Beauty division as a standalone public company, and then also separating out the THG Ingenuity division to operate independently, as I believe, at least initially, as a private entity. As of right now, that strategic game plan is on hold. Instead, THG completed a less aggressive move by internally separating the key divisions to simplify the corporate structure. This will also help with future optionality and flexibility to kind of enter into future strategic partnerships. At the end of the day, I still predict that THG Beauty will IPO in the US markets next year if everything kind of rebounds and normalizes in those public markets. Fact is that based on the current London Stock Exchange market value of THG, its individual parts are worth much more than them together when you kind of compare them to the average multiples for a branded beauty, branded nutrition, or SaaS companies. That's likely why earlier this summer THG received several unsolicited offers from opportunistic hedge funds and private equity firms looking to purchase the entire company. If you haven't been following the THG investor relations press releases, I kind of won't leave you hanging and share that the company has turned down all current offers. But let's now kind of shift into the central theme of this content, and that's the recent business performance of the THG Nutrition division. THG Nutrition is comprised of categorically focused digital first brands. It includes the world's largest online sports nutrition brand, MyProtein, and its family of sub brands, the largest of those sub brands being MyVegan and MyVitamins. THG Nutrition divisional revenue for the first half of 2022 was just over $405 million, dollars, growing at only 3.3% year over year. So, why is that growth rate so low? Glanbia Performance Nutrition, likely the closest comparative to THG Nutrition, recently posted a growth of about 15% in its first half. I think there's a few things at play here. Now, firstly, with THG Nutrition being almost entirely e commerce in its sales channel strategy, it made for a particularly strong comparative period due to online retail benefiting from the pandemic aided tailwind in the first half of 2021. Now, secondly, THG Nutrition acquired several supply side businesses and are transitioning them from primarily servicing third party brands to now focusing on internal THG Nutrition production. This essentially hurts the revenue dollars, but does help on profit dollars. And then, thirdly, and maybe most importantly to my introductory statement, was that THG Nutrition didn't exercise pricing power on the market. That's how the majority of their major competitor, Glanbia Performance Nutrition, captured their growth. About 90% of that growth rate was actually attributed to price increases. So let me play a quick excerpt from that THG Nutrition video from last year that influenced this content's introductory statement. Is this the perfect business environment for MyProtein to accelerate its growing share of the global supplements market? I believe the answer is yes. This business environment is extremely complex. You have global supply chain issues, you have inflationary commodity costs, you have labor shortages. And while THG Nutrition, and I'm sure every other kind of competitor in the market would love a much easier business environment to operate in, it's actually this complexity that I believe helps THG Nutrition more because it does have a business model built for this situation to minimize a lot of the risks in the current environment, and it has vast internal capabilities that are honestly unmatched within the space. So, if you grade that prediction from a year over year revenue growth perspective, I would be really like looking downright silly, right? What I should have noted in that previous content was that while MyProtein's global brand equity is extremely strong, it also utilizes a heavy promotional strategy. Yes, MyProtein could have honestly exercised more pricing power, but As leadership stated on the conference call, against the tough macroeconomic backdrop, the company prioritized its loyal customer base over maximizing near term gross margins. THG Nutrition is deeply vertically integrated with 7 global production facilities. Combine that with the higher margin nature of the nutrition category, and you have the luxury of making a strategic choice. Do you pass all or kind of plus sometimes some little extra cost increases down to the customer when you know you have a price sensitive customer file? Or do you institute price protection for your consumers, eat most of that margin losses in the short term, and instead focus on retention and growth of customers that pay dividends long term? The choice seems a bit easier when you lay it out just like I did, right? Shifting gears a bit, let's talk about THG Nutrition's strategic opportunities. Firstly, while the majority of divisional revenue comes from outside of the UK, there's still a ton of runway left in the various geographies. Within the largest market of America in particular, MyProtein has made solid progress in capturing market share, but still can honestly double its business easily in the next few years. Secondly, THG Nutrition will utilize its vertical integration capabilities to increase speed to market in a variety of product innovations. MyProtein even entered the frozen category recently through a licensing partnership with Iceland Foods. The company has already stretched MyProtein across a wider customer base, which can be risky if you start trying to be everything to everyone. When you do that, you end up appealing to no one. That being said, MyProtein and its sub brands have done a good job at hitting on all the important product categories and formats, market personalization, and flavor trends. One interesting product innovation in particular that I wanted to highlight was MyProtein's partnership with Perfect Day. While not the first brand to utilize Perfect Day's animal free dairy protein, it is by far the largest company. That is until Nestle starts rolling out its products after recently announcing a partnership. What I like about the Perfect Day B2B unique selling proposition is kind of twofold. In the near term, you get to appeal to the conscious consumer that prioritizes sustainability. Then, long term, you get to mitigate exposure to protein commodity costs because as the Perfect Day fermentation technology scales, the end output actually becomes much cheaper. With a brand name like MyProtein, I bet you couldn't guess what type of product they sell the most of. When protein commodity prices tripled recently, it really hurts bad a company like MyProtein because you just kind of can't raise prices out the wazoo. And then all of a sudden, when prices go back down, you lower the price and you look like an erratic asshole to customers. Now, for this content's quick final thoughts, I want to focus on the possibility that the THG Nutrition division could be an acquisition target. On kind of the one hand, CPG conglomerates are looking for ways to accelerate sales growth with more sought after categories. If you consume my content regularly, you already know just how important nutrition is as being one of those categories where there are growth and is very much in high demand by CPG conglomerates. On the other hand, the THG Nutrition division is more profitable than THG Beauty because of its vertical integration piece. That would be extremely tough for THG to replace if the company does plan on staying whole. When asked about the chance that THG Nutrition was getting acquisition interest, leadership caught a case of like the nervous laughs and basically pleaded the fifth. Does that mean that the probability is high that THG Nutrition could be acquired? Maybe, maybe not. But I'll let everybody's mind kind of wonder on this point until more public information comes out one way or another. I hope you enjoyed this YouTube video. If you did, consider hitting the like button to support me. Also, help me get to my near term goal of 2,000 subscribers by hitting that subscribe button. I'd love to see you join me on this journey, but we need to fix the fact that almost 80% of you that are watching this YouTube video right now are not subscribed to my channel, and that makes me extremely sad. But I do want to thank you for tuning in, and I'll see you in the next one.